Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's March 29th. Hope you guys got some great upcoming plans. We won't be doing this tomorrow, as tomorrow will be Good Friday, and both markets will be closed. The bond market will actually be closing today or a little early at about 11 o'clock Pacific Standard Time. And then both stock and the bond market will be closed tomorrow. So we won't see you guys until till Monday. But I hope you guys had a full Passover, Good Friday, Easter, and even a happy uh, April Fool's Day. I think that's kind of funny how we see Easter and April Fool's Day together here. So let's jump into this. We got a lot to go over today. Sorry for all that. We'll start with the weekly jobless claims. We got 227,000 people applied for unemployment the previous week. Forecast is supposed to be in that same range, about 230, and it dipped all the way down to 215,000, which is obviously a very good number. Now, keep this in mind. Next week is jobs week. We do have the ADP coming in on Wednesday, weekly jobs claims on Thursday, as we always receive. But the BLS will be giving their job data. So next week will be heavily dependent on Friday for jobs numbers. So stay tuned for that. And we can expect it with these numbers we're seeing this month. Jobless claims, expect a pretty strong number there as well. Now, let's get over to personal income for the month of February. So in January, had a 0.4% increase. Forecast supposed to be another 0.4% increase, and it continued that same trend at 0.4%. So great, people are making more money. Now, we got consumer spending, the other half, where we had 0.2% growth in January. Forecast for February was supposed to be 0.2, came in expectation at 0.2%. So people are making more, but not spending quite as much, which is obviously showing that they're saving money. That's also a good sign too. We would like to see people save some money, but of course, the economy is moving along if they're spending money. Now we got the core inflation. This is the PCE personal consumption expenditure when you strip out the food and energy, which gives us the core inflation, and this is the number that the Fed will look at for in terms of for a real inflation number here. So we had a 1.3% growth in January. February forecast 0.2%, and came in expectation at 0.2%. Now that increases our year over year from 1.5 to 1.6%. Now something to keep in mind, these go on a 12-month rolling basis here. Now, last March, they had a drop. So, what that translate is, what that means is, once we go into next month, we could have a huge jump here year over year, just due to if we have a 0.2% or higher, it could jump up dramatically. It could jump from 1.6 to like 1.9. or higher. So again, something to watch for next month. It could kind of obscure the numbers just because these go on a 12-month rolling basis on there. So again, because it's going to next month, a friend of mine, Barry Habib, kind of mentioned that and brought that to our attention. And so just kind of be prepared for a possibility of a big spike next month because of that, how the numbers work in that area there. Okay, if that makes sense here. Now we got manufacturing in the Chicago region, the Chicago PMI for the month of March. So it is 61.9, and anything above 50 is considered expansion or optimistic, and it came in at 57.4. So it dipped a little bit in the Chicago area, but still in a good area, good range here. And then last but not least, we got the consumer sentiment for March. So we had another reading earlier in March at 102. Forecast supposed to be the same, and it dipped down to 101.4. So still a very good number here. People are still feeling very good about where things are at. So let's take a look at the headline news. Stock market's taking a little bit of a rally today. It's been taking a bit of a beating. It's looking like this month of March that will be overall. It's going to be as a month. You're going to see all three indexes at a lower level. Instead of gaining, it will be a negative level here. So let's see how the bond market's playing out here. Bond market's still hovering in between here, the 50-day moving average and the 25-day moving average. We're up currently about 13 basis points, so that bodes well for us in terms of price improvement so far. Now, it did start off lower, so it's possible if it continues this, you might see a little later today, or maybe at the very end, that there might be a price improvement here. But again, you're talking matter of time when the bond market will be closing here. I'm kind of doing this based almost at midday at about 10:30 our time, Pacific Standard Time here. So it doesn't leave much time here. Here's the Treasury. Treasury's coming down even further. We're down to about 2.74 as well. So that's where the yields are, what we're finding at. Yields are declining a little bit further. Now, this was kind of interesting because it came out a pattern here of what they call a hammer. Typically, when you see this downward trend here, and then when you see this, looks like a wick coming down and creates this hammer effect, they could tend to have a reversal. So something to watch for on Monday. Today, maybe because we're going to a longer weekend, that they may go to a flight of safety. But again, it's something to watch out for. Right now, we're down to about 2.74. Market hasn't yet closed, and we'll kind of see what things where it translates. But if you want to see where the market closes, just stop over to Twitter at Mike Bjork, and I'll be posting that information on there later today. All right, you guys have a great rest of your day. Thanks so much for watching. We'll see you guys on Monday. Bye-bye.